Mr. Ricardo Evangelista, who works for ActivTrades. Ricardo has an extensive experience and has undergone various roles managing the international desk and marketing functions for a number of territories. Ricardo will present with the various phases and aspects of the financial markets. So let's welcome on Ricardo Evangelista. So Ricardo's subject is the different phases and protectionism and impact on the financial markets.
Okay, thank you very much. Hello everybody. I know it's quite late and there's been a lot of people talking today. I'll try to be as engaging as possible. I could sing, but that probably wouldn't go down so well, considering that my voice isn't my greatest asset. Talking about assets, we're going to be discussing here the impact of protectionism on the financial markets and on specific assets as well. So I'm assuming that everybody here is familiarized with protectionism. We all know what that is. No? Yes? Someone? Okay, we have two winners. Excellent. So protectionism has been much talked about recently. I mean, there are several definitions out there, but essentially, protectionism is a form of managing the country's policies towards other nations when it comes to importing and exporting. And it's based on a belief that protecting what is produced in that country against the competition from foreign producers or service providers. Many people have talked about this in the past. There was a very well-known economist, David Ricardo, great name, who started this discussion in the 18th century. And he used an example of England and Portugal and how they were protecting their markets so that they could maintain the absolute supremacy of their own products. In the case of Portugal was wine, in the case of England was textile. So this is used in models. A lot of people, I don't know if someone here has studied economics. No? So if you had, you would have heard about this. Anyway, the general feel out there is that protectionism is not good. So why is protectionism so much, or gathering so much protagonism in the world today? Because everybody's talking about it. So Americans, as you know, with President Trump, they started imposing tariffs on Chinese imports. Europe has for decades been subsidizing their own agricultural products. The Chinese offer subsidies to their car industries. And of course, as a result of all of this, we have escalating trade tensions. I'm sure you all have heard about this, right? Do you think it's good that we have trade tensions or bad? It's bad. It's very bad. It's very bad. So trade tensions have been mentioned by all the heads of the central banks and IMF as being the greatest threat to the growth of the global economy. So this is not good. So people are adopting these protectionist policies for different reasons. Some believe that it will protect their own economies. Some do it as a retaliation against other nations, like, for example, China has done recently. The US started imposing tariffs on Chinese imports, and the Chinese stopped buying American soya, for example, which has had an impact on the financial markets. You know, so so that's an interesting angle to approach it from. But also, of course, all of this protectionism comes associated with the recent wave of populism. So all these populist leaders, and by populist I mean people that offer easy solutions to complex problems, they keep boosting this idea that what is from our country is good and the other ones are out to get us. which is really not the spirit we should be living under in an age where we are all connected, everybody travels around the world. We should be respecting each other, nurturing international relations, and not doing what some of these people are doing. I can see that there's a lot of people around that don't agree with what I'm saying, and they're leaving, but thank you to the ones that are still here. Anyway, I'll go straight to the point. So does protectionism impact the financial markets? I haven't done this very well because I've answered my question there already, but yes, it does. It does impact the financial markets. So as I said just now, it's been mentioned by many world leaders, world of financial institutions rather, as being the greatest threat to the continuous growth of the global economy. The Fed and the ECB, so Mario Draghi and Jerome Powell, they have mentioned this when they talk about their easing policies and cutting rates, etc. They all mention the threat of trade conflict, which results from protectionism. You all heard about what the People's Bank of China has done with the exchange rate. So they set the mid-level much lower as a way to offset the impact of American tariffs on Chinese imports, because when they devalue their own currency, then the product that is bought from China becomes cheaper, and so the impact that these tariffs would have on Chinese imports in the US is diminished, and so the consumer is not affected. At least this is the plan. And of course, it affects as well the risk appetite in general markets. So every time there's an escalation in the tone of the rhetoric from Trump or from anybody else with importance in the global stage, we see that the stock markets suffer. And how do they suffer? People start selling because they think that the bubble will burst. So we've seen several ups and downs. For example, in the US market, the S&P has been fluctuating according to the tone of the people that discuss this. So every time President Trump sends out a tweet and says, we're going to get the Chinese, the stock market dives. And then he thinks, oh, maybe I took it too far. He sends another tweet on a positive tone, and then the stock market recovers, and everything is good again. So this may sound funny, but actually is the greatest issue of our times. So, and this is going to stay with us. There will be no easy solution to the trade war. I think the conflict between the established power, the US, and the emerging power, China, will last for decades, and this will keep impacting the market. So maybe this is something for all us to reflect on and think about it when we trade. So which asset classes are exposed to the impact of protectionism? All of them, because there are many, many correlations between different asset classes, and therefore all of them are exposed. We've seen, as I said, stocks, they fluctuate a lot according to President Trump's Twitter account. We have, of course, currencies that fluctuate according to the monetary policies of the central banks, and the central banks have come out and said that their monetary policies are mainly dependent on a threat posed by the escalation of the trade conflict. And of course we have commodities. We've seen how the Chinese policy towards American soya has impacted the price of the product. I don't know if someone trades soya, but it's been quite interesting. And of course, all of this drives people towards fixed income. And we see that American treasuries are much in demand, and also other treasuries. And to the point that, for example, German bonds now have negative yields. So people are paying to park their money in German bonds because they are really scared that all of this is going to go south, it's going to go wrong, and there'll be blood and tears. Right, so what can you guys do to look after yourselves in a scenario like this, when there's an escalation in protectionism? What would you do, sir? Small size. Okay. Anybody else? Hedge the positions. Yes. Be careful, conservative with your trading. Hedge your positions. Absolutely. So we all know that assets that are, the so-called safe havens, like gold, tend to do very well when there's an escalation in this rhetorics and the atmosphere gets heavier. Gold does well, as everything else does badly. I would say that staying very well informed is very important. So follow the economic calendar, make sure you listen to the news, listen to Bloomberg, CNBC, stay informed is very, very, very important. And of course, as the gentleman there said, hedge your positions, always, always hedging. Okay, so I won't keep you for any longer. I will not sing, mainly because there's not enough people here to be impacted by my awful singing. I think they all left already. So there's no music. So, but it's an idea for next time. We can do a karaoke. Count me in. Count me in. Listen, guys. I don't know if you have any questions. If you want to discuss any of this. Okay. Well, thank you so much. Just to let you know, I didn't introduce myself at the beginning, but I will do that now. My name is Ricardo Evangelista. I work with ActivTrades. ActivTrades is a UK-based broker. We offer a wide range of products. All the asset classes I mentioned there, we offer. We have a great platform called ActivTrader. We also offer MetaTrader. We have Lloyd's of London insurance policy covering up to £1 million per individual client, and our execution and pricing are excellent. So, sorry, I had to throw that in at the end. Thank you very much. Thank you.